By the end of this video, you will know exactly when to buy and when to sell in the forex market. Many beginners, after watching a couple of YouTube videos, feel they are ready enough to take on the market. They go ahead to find their trading account and take a couple of trades just by following price or following the candles exactly where they are going. We get lucky sometimes and we make some money, but for the most part, you realize that we lose a lot of money doing this. Now, in forex trading, entry and exit points are very crucial, and in this particular video I'm going to take my time, walk you guys through the step-by-step approach, right? The final things that I look for before finally pulling that trigger. Also, I'll tell you exactly where to put your stop loss and your take profit depending on the trade scenarios or trade setups. Stop loss, take profits are not random. You need to allow technical analysis to tell you exactly where to put your stop loss, right? So you don't want to go anywhere. You want to watch this video to the very end because of the insane nuggets that I'm going to have for you guys, right? Trust me, when you get this right, 90% of the time you find yourself on the right side of the market and not on the wrong side. Now, before I jump into today's topic, guys, do me a favor right now. Kindly pause this video, subscribe to this channel, click on the notification icon. Also like this video. If you don't like this video, I'm not continuing. Like, and share this video with your friends as well. It's going to make the channel do well. Now, without wasting much time, let's get straight into today's video. Now, for the purpose of this example, I'm going to be using a few trades that I've taken, right? The first one is NZD-USD. So this particular trade setup, NZD-USD, I am in for a sell and I shared it with the community. Also, guys, if you want to join my Telegram community, which I recommend you should, because I do share trade signals for free over there. Like this morning, I sent NZD-USD, as you can see on your screen. I sent NZD-USD to the community. And then all you have to do, this is for free, by the way, this is for free. So all you have to do is to just click on the link in my description to join the Rick FS Telegram community. It takes you to a platform like this. All you have to do is to wait for my trade calls. Once I send a signal like this, NZD-USD, I send you the clear entry point and then the take profit levels that I'm looking out for, including the stop loss. Then all you have to do is to find a trading account with your broker. If you're looking for a broker, I recommend Xnest. Click on the link in my description once again to open an account with my recommended broker, Xnest. You find it, you take my signal. Once you take the signal, you put your stop loss, put your take profit, and then your entry price as well. And then your job is done. You have to now wait for the market to do the work, and then you can profit alongside me as I'm doing here. As you can see, we are in a lot of blues on the channel right now, and it's all for free. Now back to the video, guys. Back to the video. So you look at NZD-USD as well. In this particular video, I'm going to just talk about like the entry point or the exit point. So I'm not really going to throw light on how I found the setup, even though subsequently I'll be doing that. So NZD-USD, right? I was already looking at the setup for a sell because overall, once again, market structure is very, very important. Overall, we were in a downtrend, so I was looking for an entry point. And then if you look at this, this is a simple scenario of what a swing and then pullback. So I was looking to catch a continuation trade to the downside on NZD-USD. So the market upon operating here on a Thursday morning, I had my Fibonacci point right here. Market played nicely into my 61.8 region or zone. Now, guys, this is where it gets interesting. When do I decide to exactly enter the trade? If you've been following me for some time now, you know that I make use of what candlestick patterns a lot. I'm big and heavy on candlestick confirmations because they tell you exactly who is in dominance at any particular point in time in the market, right? So another thing you need to know about candlesticks is that where I use them is very, very important. They are the last set of things that I consider. I make sure that before I consult my candlestick confirmations, I've already found my trade setup or trade idea. In this case, I use my Fibonacci retracement as my confluence. Now, all I have to do is to pay attention to what the bullish and bearish presence or bullish and bearish closures, depending on the time frame that I'm looking at. For confirmations, I still like to stick to the 4-hour time frame. But if you want to go lower, it is recommended to go anywhere between 1 hour and then 4-hour time frame. So sometimes I can use the 1 hour for confirmations, the 2 hour for confirmation, or the 4 hour for confirmation. Now, all of these time frames have their pros and cons, right? The lower the time frame, the lower your risk as well, and then the higher the time frame, the higher your stop loss in pips relatively, right? But I am kind of comfortable with the average stop loss that I get on the 4-hour time frame, so I'm okay with that. Now, the higher the time frame as well, the more solid the confirmation. Sometimes you can get an early confirmation on the 1 hour time frame and then that will not turn out to be what the confirmation for the trade. The trade will now go in a different direction. Also, sometimes you can get in earlier, but you're just going to be in drawdown for a far longer time up until when the 4-hour candle has finished forming. So there's no really perfect right time frame to look out for your confirmations, right? But these time frames that I mentioned for you can guide you. 1 hour, 2 hour, 4 hours is okay, it's fine. Now you just have to now decide on which one you're comfortable working. I like to work with all of them because I know exactly when they come in useful or come in handy, right? So for this particular trade setup, you realize that if I am waiting for my entry on the 4-hour time frame, now mind you, I'm looking to sell. So I have to look out for what? Bearish confirmations or bearish candles. Now the size of the candles or how the candles close are also very, very important. Wicks represent rejections, right? When I'm looking to sell, I like to see wicks from the top of the range, right? These are good signs of rejection because all this simply means is that the bulls are trying to push price all the way up, but before the candle closes, the bears find a way to push price all the way back down. And then it's vice versa when I'm looking for buy setups as well. I like to see wicks from below the range. So when I woke up and I saw this candle closing like a doji and then it's having a very big wick from the downside, this was like a red flag to me. So all I had to do was to wait for the next candle or wait and observe the next candle. This particular wick here is telling me that the bulls have not been totally exhausted and then they could possibly push price all the way back up a little bit. And then if you look at my analysis, you do realize that I have a trend line third touch here as well. So I was anticipating for a possibility of having two confluences in the sense that I will see this being a fib region and also trend line third touch. So I was very skeptical with the trade, and that's why I even had a late entry. Other than that, probably I would have taken my trade right here, but I was looking for the trade to develop some more and then I can get in on the right momentum and not be taken out easily, right? So in observing the next candle, you do realize that if I were to wait for the 4-hour to close, this is where I would have missed the setup. I would have had my entry somewhere around here because this is where the 4-hour candle closed with a massive bearish candle. So this is one of the disadvantage of 4-hour time frame. Sometimes you do get confirmations like this. So when I was watching the market and it was trading, I really liked the volume of the candle. So what I had to do was to just go on a lower time frame, in this case the 2-hour time frame. Even if this candle closed, this was my confirmation for the bearish continuation. I took my entry right at the closure of this candle. So let's go back to our 4-hour time frame because we've already taken our entry on the 1-hour time frame. Now for stop loss and take profits, it depends on setup, or it varies from setup to setup or confluence to confluence. Now for the Fibonacci, usually you just want to, if you get an entry here, you want to put your stop loss above the range because ideally, according to our trade idea, we are saying that the Fibonacci level over here is going to hold for a potential sell. So it means that if we are wrong, or if price finds its way all the way above this range, it means this particular trade idea is wrong, and then this is like how much we are able to want to risk on the trade. Stop loss is always supposed to be above or below the range of your particular confluence. In this case, this is a sell trade, so above this particular range. The whole idea or the whole trade analysis is coming from this range. Now with that being said, sometimes you can put your stop loss above the range. For this trade setup, it allowed me to risk 30 pips. Sometimes it can be bigger, right? So this is where you find some people adjusting the stop loss because it is way too big and they also still want to take the trade setup. So instead of using maybe 30 pips, then you'll be like, okay, let me use 10 pips or 20 pips for this trade idea. And then you see that 10 pips or 20 pips will allow them to put their stop loss somewhere around here. Now their stop loss might be small in pips, but they don't put the stop loss exactly where it's supposed to be because the market can just find its way somewhere around here when it's consolidating, take you out, and then go all the way in your favor. So at the end of the day, you are not wrong, your trade analysis is not wrong, but you did not make any money because you simply did not put your stop loss where it is supposed to be. Now take profits, right? When it comes to take profits as well, you want to use structure, you want to consider structure as well. So if you look right here after this sell trade, one of the levels that the market is going to travel to is this cluster of candles right here, or this previous turning point. So it is only ideal that you can consider these areas as a potential take profit. Also, this is a downtrend, so at a point we are expecting that new low to be created. hence our take profit 2. So in the event where this particular take profit is taken out, then we can look at our next lows for our potential take profit, and that's why we have take profit 2 here. Now in setting your take profit 2, when it comes to the Fibonacci, you can consider the Fibonacci extensions, right? Usually when the market breaks a particular level, it heads towards the Fibonacci extension of what, either negative 27 or negative 61.8%. So you do realize that instead of putting my take profit somewhere around here, I just decided to put it in a midpoint here, because from here to here it's enough for my trade idea. And that's just that. I'm done. This is what I'm interested in. This is where I want to make my money from. So I calculate my lot size based on my risk that is involved, and then I take whatever profits that I'm supposed to get from my trade idea. Another way you can set a take profit 2 is to always zoom out and then look for the next turning point. If we zoom out properly, you realize that NZD/USD's next turning point will be somewhere around this area right here. So you can use this to guide you, and then also exactly falls on what, negative 27% once again. So this right here, we're expecting NZD/USD to subsequently find its way here, at least before we can have another form of retracement. Sometimes it can even break this level and find its way to negative 61.8, which is also in confluence with what this next turning point here. But there are some cases that are quite straightforward. You don't really need to sweat it like the way I did with the other one, like GBP/JPY. I took this trade earlier this week as well, also coming from a simple Fibonacci concept where I have this as my swing and then this as my retracement. It found its way to what, my 61.8 Fibonacci area or region. What do? I see my 4-hour candle of a bearish closure, very nice one. I take my trade here, put my stop loss above the range. When it comes to take profit, just like the other one, I use levels for my take profit, and if you look right here carefully, this right here is our next swing lows. So this can be your final take profit, and then half of this can be your take profit 1. So just like that, take profit 1 smashed, heading towards take profit 2. As simple as that. So you manage your trade accordingly, because sometimes the market might not necessarily get your take profit. It can find its way to your maybe take profit 1 and then all the way up. So when it comes to trade management, I'll do another video or subsequent video talking about how I manage my trades as well. But this particular video is just focusing on my entry and then exit point. So once again, stop loss should be rather above the highest point of the range and not anywhere else or anywhere within the range, right? So there you have it, guys. These are like the simple tips that I follow when I'm taking my trades, my clear entry and then exit points. I'll do subsequent videos to clarify more things for you or other content as well. If you want me to make more content like this and also touch on other areas, you know what to do, guys. Don't forget to subscribe to this channel, like this video as well. Click on the link in my description to open an account with my recommended broker XNES. Also click on the link down there to join the Rick FS Telegram community once again. Do what to follow me on all social media platforms at RICK__FX, especially on Instagram and on Twitter. That'll be all for this video, guys. I'll see you in the next one. Peace out.